Good morning. How's it going? It is half an hour before the market opens on August 21st. We're really just expecting the markets to mostly chop sideways into the end of the week, although we might get a lot of volatility today, in particular because we have the FOMC minutes coming out. What we'll see is mostly algorithms playing around. So what happens is the FOMC releases its minutes. We have computers analyze the difference between what they said this time and the previous meeting, and then algorithms will decide whether to play that up or down, and you'll get a bunch of volatility. It's mostly not going to be institutions because we've got the Jackson Hole meeting coming up on Friday. But one interesting thing that I saw yesterday was that there's supposed to be a unemployment revision coming out today, I believe at 7 a.m. I'm going to see if I can find that. Actually, I might as well do it now. And if those numbers get revised significantly, especially if they get revised downwards, and there were a couple of major banks that it was either Goldman or JP Morgan that were anticipating potentially a huge downward revision. And if that is the case, then we're going to get a big reaction in the market and we will get directional. So let's see if that's on here. I don't see FOMC is going to be 11 a.m. Pacific time. I don't see, let's go over here, see if we can find it on Trading Economics. Today's Wednesday, the 21st. Minutes, Jackson, no. No, I'm not seeing it, but let me see. Unemployment. Okay, so I'm not finding it immediately. Maybe I'll try to find it a little bit later. But just be careful this morning. When we open up, remember that potentially we have that big unemployment report or revision coming up, and that could send markets hugely directional if we don't like what is in that revision. So just avoid trading the first half hour. We avoid trading first half hour anyways. And then maybe even the first hour, normally we're just watching before we do any sort of trading. So just be aware that that could cause huge volatility and potential directionality and invalidate anything that I'm going to say right now because we just have no idea what that report is going to be. And except that a major bank is saying that there's big potential for that number to get revised hugely downwards. If it gets revised hugely downwards, that means that unemployment is a lot worse than what was believed. And the Fed may have to shift its attention away from inflation and onto unemployment. And if unemployment is really bad, we can't start cutting rates right now. We would have to wait. And so that would cause a negative reaction in the markets, and we can expect things to start moving downwards. So all in all, because of the way that we're stacked in these expectations for September, we are just setting ourselves up for, is that a big difference? One day ago, that was a big difference. Okay, so overnight, we're already shifting this way. Let me see, 67, 71. Yeah, shifting this way. Okay, so we're shifting back to that 50 basis point rate cut, unfortunately. So because the way that we're stacked over here, there's not a lot of room for us to react positively to the upside, but there's huge room for us to react negatively to the downside on anything that doesn't match this expectation. So what's going to happen on Friday at the Jackson Hole, or what might happen today if in the FOMC minutes, or today with that unemployment report, it's just more potential for us to see a decrease in these two numbers and an increase over here that's not on the chart on a 0 basis point rate cut. And all of that is flying in the face of what the market has been doing. And that would cause us to start dropping again. So we just want to make sure that we're well hedged to the downside, even though the market looks like it is doing very, very well and moving upwards and recovering from this correction that we had over here. We just want to be aware of that. So just no huge bets. We want to make sure that we are offsetting everything or hedging everything as we start to, or if we started to lean our portfolio positive, which we did a couple of days ago, 2-3 days ago. So we're just be very, very careful. Just watch out for a lot of volatility and just be hedged to the downside. Let's take a look. We already looked at our economic reports. Let's see how VIX is doing. VIX is floating up. Now we're at around 16. So like I said, we're probably going to get heightened volatility, not necessarily directionality, but today, especially at Friday, there's just major news that are coming out. We had some pretty important bellwether earnings come out. So let's take a quick look at those and get a clue. So today, let's go yesterday after market. Nothing major. Let's look at keys. Keys, okay, up quite a bit. So looks like positive reaction to earnings. Then we should have Target and TJ Maxx. Got TJ Maxx, Target, Macy's. Let's take a look at those. Target, very positive reaction to earnings. TJX, very positive reaction. And then Macy's, very poor reaction. But Macy's is a lot smaller than those other two. And they're a different type of retailer than the other two. Department store versus a I don't even know what to call Target. But more retail store, and a TJ Maxx is a discount retail store. So yeah, Macy's market cap 4 billion versus 77 billion on Target, and so almost 20 times smaller, and 134 billion on TJ Maxx, so almost 40 times smaller. So this is going to have a lot less impact. So, but on the retail and consumer end of things, then this is encouraging news for XLY, which was looking kind of not that great. And you can see XLY is up a tiny bit pre-market. Let's take a look at our futures, see how we're doing over there. Mostly flat, about 15 basis points on the S&P 500, same with the NASDAQ, and the Dow so all of them at about 15 basis points. So randomly up, just mildly up. But again, 2 days ago, we were very mildly up and we just ran. And yesterday, we were very mildly down and we mostly chopped sideways. So today, this is not going to be that meaningful for us if we have that employment report coming up and the FOMC minutes. Those are going to have far more influence on whether or not we're going to move up or down, or just chop sideways in a large range today. Okay, so we just want to be very careful. One thing, I was going to say, you could look at, so sometimes pre-market, especially after earnings, you have stocks that are in play that move quite a bit, and we can take a look at those. But today I would just avoid it because Target is up here. JD, that's interesting. We'll take a look at China. But we just really want to avoid, like today, it's going to be tough. If you want to day trade and you like these big, huge swings, well, it's really easy to miss your timing on a day like this. So it's probably better to just trust in the positions that you already have for swing trades, make some adjustments before these market events. So before 7 a.m. and 11 a.m., you might, if you need to tweak something in order to balance your portfolio out, then I would go ahead and do that. But other than that, today is more of a day to try to avoid. Let's take a look at how China is doing. Yeah, it looks like it's yeah, breaking down. We hit that yesterday. And then we are talking about how yesterday, I'm pretty sure in the morning, we are talking about how we hit this trend line and we're probably going to break down. Or no, it was in the afternoon. It was afternoon when we took a look at Win, and this started to come down. And so our anticipation is that it could break down further. Today at the open, looks like it's kind of flat. So not big news out of China, although let's something happened with JD. Yeah, JD is down. So it wasn't earnings. So somehow overnight, this market did not like what was going on with JD, and they're down quite a bit overnight. So I would just be cautious with Chinese stocks or anything related to China. Right now, the focus might be on the Fed, but what is happening in other economies like China, Japan, they're also having an effect on the US market at the moment. So we just want to be careful. So if China is not doing well, it's going to be kind of difficult for the US to do well as well, because they are the two largest economies in the world. So just watch out, be careful today. Don't make major trading decisions would be my plan of action. And then just utilize the time periods, the first half hour of trading and the hour before 11, so 10 a.m. to 11, to rebalance the portfolio, just make sure that everything is well hedged. So that's my plan of action. And we'll see how the day plays out. If there's any truth to the report that came out about the potential huge downward revisions in the employment report, and also we'll see if there's a big I don't think there's going to be a big reaction to FOMC minutes. I really don't think they said anything new. And then we might get volatility because of the algorithms, like I talked about earlier, but I don't think that's going to send us one way or the other. I think people are going to be sorely disappointed at Jackson Hole as well. I don't think Powell's going to say, look, we didn't get that much more data since the last time we made our decision, and we need to see the data, and we don't make decisions ahead of time. That's pretty much what I anticipate he's going to say. Whereas everyone else is going to be looking for clues that he's like, yeah, it might be appropriate for us to start cutting rates. I don't think we're going to get any of that. So we'll see. I will see if I'm right or wrong and how these markets react. So just be careful today and have a great rest of your day. I will see you in the aftermarket trading session.